Welcome to Illuminati Silver, where we tell you the truth about silver. Today is Friday the 14th of December 2018, and we're briefly covering the relatively poor economic data out of China today and its effect on world markets. Stocks worldwide fell after weak economic data from China and Europe fanned concerns of a global economic slowdown and left investors worrying over the wider impact of a still unresolved China-US trade dispute. At the time of writing, the London FTSE is down 57 points, the DAX down 128, Nikkei down 441, and Hang Seng Index down 425. And the Dow Futures Pre-Market Index is indicating an opening down of over 200 points. It was reported earlier today that China's November retail sales grew at the weakest pace since 2003, and industrial output rose the least in nearly 3 years as domestic demand softened further. China retail sales were up 8.1% versus an expectation of 8.8%, and China industrial production was up 5.4% against an expected 5.9%. Now, although this data is still showing growth, it also indicates a slowdown, and this is what is concerning the markets. In addition, the data out of Europe has also compounded the situation. The IHS Markit France manufacturing PMI fell to 49.7 in December from a 50.8 in the previous month, and against market expectations of a slight decrease to 50.7. So it was a full 1 point down on expectations. The IHS Markit Germany manufacturing PMI dropped to 51.5 in December from 51.8 in the previous month and below market expectations of 52. Michael Hewson, Chief Markets Analyst at CMC Markets in London, said, quote, "The data this morning out of France really hasn't helped the mood. You look at China data, you look at the flash PMIs out of France and Germany, and they've really sort of reinforced concerns that the global economy is slowing down. Ultimately, I think it rather questions the wisdom of the European Central Bank ending its asset purchase program at the end of this month. You've got Mario Draghi basically tightening into a downturn," unquote. Sue Trin, head of Asia FX strategy at RBC Capital Markets in Hong Kong, said that the data, quote, "means that the worst is yet to come, and policymakers will be very worried, particularly with consumption growth falling off a cliff. So I expect further support measures, including rate cuts, will come in coming weeks, although these data would indicate measures to date aren't really working," unquote. The Chinese yuan weakened 0.4% against the US dollar in offshore trading following the data announcement. Clearly, in addition, the US has concerns of its own, not forgetting that US corporate earnings due next month could throw a spotlight on the impact from the US tariffs on imports from China, while there is a risk of a government shutdown, as we all witnessed in the broadcasted White House dispute between Schumer, Pelosi, and Trump. On a positive note, however, this may actually cause the Fed to delay its interest rate rise next week. We shall have to wait and see. For the moment, gold is standing at $1,238 and silver at $14.63, and the dollar index is up at 97.5. Now we shall cover this and its ramifications and more in our weekly update tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.